Hello and welcome back to Live from Paris. It's time now for business news with Matthew Warren, who's right here. Hello, Matthew.
Hi, Lorna.
So we're going to start off, of course, it's budget day here in France. The French government is presenting its budget for next year.
That's right, and looking to make 30 billion euros of savings. 20 billion will come from extra taxes. 10 billion we hear from spending cuts. And actually, François Hollande, the president, has been criticised for not going further in those cuts in expenditure. Now, all of this is based on France achieving 0.8% growth in 2013. Many think that's looking shaky. We've just heard this morning that in the second quarter of this year, France managed no growth at all. The economy was flat. But the Prime Minister, Jean-Marc Ayrault, has been insisting how important it is for France to cut so that it can get its budget deficit down to 3%. Let's take a listen.
If we give up our aim to cut 3% of the public deficit by 2013, then straight away interest rates will rise and we'll be in the same position as Italy or Spain. I don't want that. I want to stop this drifting debt.
Well, that French budget comes hard on the heels of Spain. They presented their new round of spending cuts yesterday.
Yes, that's right. And we heard the Prime Minister there saying France doesn't want to be like Spain. Well, Spain has far deeper cuts to make. And that, of course, is against the backdrop of increasing social unrest.
As Madrid tries to smooth the way to an international bailout, it's let itself in for a bumpy ride at home. Thursday's announcement of economic reform was preceded by days of sometimes violent anti-austerity protests. As many Spaniards feared, the new budget has brought new cutbacks. The plan for 2013 will aim to rake in 40 billion euros in wage freezes, tax rises and structural reforms, with ministry spending scaled back by an average of around 10%. The programme will also see public sector pay frozen for the third consecutive year, the creation of an independent authority to monitor government finances, and a 20% tax on substantial lottery wins. There was a faint glimmer of good news, though.
The items that will increase in the next budget will be retirement pensions and also grants.
The lean 2013 budget seen as preparing the way for Madrid to formally ask for a bailout from the IMF and EU. That would trigger a bond-buying programme from the ECB and ease Madrid's borrowing costs. With 1 in 4 workers unemployed and the country slipping further into recession, the economic reforms may court skittish investors but will heap more hardship on Spain's crisis-wary population.
Well, Spain will also be publishing the results of its independent bank audit today. The country's already had approval to get a bailout of up to 100 billion euros for its banks, but latest estimates suggest that it might need less than that, perhaps around 60 billion euros. We'll keep an eye on that one, Lorna.
OK, well, you're also keeping an eye on the markets. How are they opening up?
Yes, markets are in a much better mood at the end of this week than they were at the start. Take a look at Europe and how things are opening up there. All up, and you can see there in Madrid, the Spanish IBEX up a full 1% so far this morning. Over in Asia, markets mostly closed up in positive territory as well. There was one exception. That was the Nikkei. That slipped. That was partly because industrial production figures for the month of August showed it fell more than expected.
OK, well, moving to here in France, the fate of a steel plant in the east of the country was a big issue in this year's presidential elections, and it's still under threat.
Yes, and still a huge issue. This is ArcelorMittal. They have been threatening to close part of their steelworks in Florange in the east of the country. That would put over 500 jobs at risk. And yesterday, French President François Hollande met the owner of that company, Lakshmi Mittal. Well, Mittal himself is getting criticism for earlier promises that he made about the company's operations here in France.
A big smile and an avalanche of promises. Shown here at the start of 2006, Indian oil magnate Lakshmi Mittal had just launched a hostile takeover of Arcelor. It was deeply unpopular in France, and Mittal needed to give reassurance. He said then that no employees would be laid off due to his bid, and that he would honour all the company's commitments. Even before the takeover, Arcelor had been planning to close the plant at Florange in northeast France in 2010, but Lakshmi Mittal held to his commitments and kept it open. Fast forward to a year ago and the fires burn in Florange no longer, and the plant's employees have been technically laid off. ArcelorMittal blames the European crisis for the decline of demand for steel, but a recently published report produced by experts from the French Economic Ministry puts more blame on the company. The report blames short-sighted strategy rather than long-term planning for the problems. Since 2007, ArcelorMittal's European investment has been diminishing. Worse, 80% of that investment has been pumped into keeping the company going, and only 20% represents investment for growth. The report's authors conclude that the Florange site is still viable. No comment yet from ArcelorMittal.
Well, now let's get some more of the day's company news. And discussions are continuing between aircraft giant EADS and the British defence company BAE Systems. Now, the chief executive of Airbus has said the two companies should stick to a deadline of October the 10th to outline details. The French and German governments had said the deadline could slip, but Fabrice Bregier told the French newspaper Les Echos the deadline should be respected.
Heineken has succeeded in its takeover of the maker of Tiger beer. The Dutch brewer has been battling to take control of Asia-Pacific breweries. Shareholders in the parent company of APB have voted to accept Heineken's offer. It's paying $4.6 billion for a 40% stake.
And heads are rolling at the British security firm G4S. The company failed to deliver on a contract to supply security staff at this summer's Olympic Games. That meant the army had to be called in to provide reinforcements. Well, now the chief operating officer and the global events director are resigning over the fiasco, but the company's chief executive, Nick Buckles, is keeping his job.
Okay, well, on to something a little bit lighter now, but still quite serious, because we all complain sometimes about not getting our post on times. But the postal service in Costa Rica has got a real problem on its hands.
Yes, imagine delivering letters in a city of 2.5 million people where there are no street signs or street names. I was amazed when I even heard about this. This is in Costa Rica, in the capital, San Jose. Well, now the city is installing street signs. We can see some of those going up there. Now, it's not just confusing for people like postal workers, it also has an economic effect. It's estimated that around $700 million a year, that's the cost of all this undelivered mail. Well, this postal worker from Costa Rica explains the nature of the problem.
We distribute approximately 28 million letters every year. That's more or less the average of how much mail traffic we manage. We've conducted studies that show that approximately 40% of those 28 million have incorrect addresses, with laughable, quaint addresses that make it impossible for the mailman to deliver the item.
Wow, so now you can find the way to San Jose.
Very good.
I won't make you sing it, though. Not this time. Well, that's it from us for now, but don't go away. Luke Brown will be here with more news headlines right after the international weather. And for more information on all today's top stories, you can always go to our website, france24.com, where you'll find features in English, in French, and in Arabic. Do stay with us here on France 24.